All right, welcome back to capitalcompetent.com. Today we're going to be talking about what to expect from the upcoming market. There's two schools of thoughts with what's going on, and the first one is the best possible outcome and also the worst possible outcome. So we'll get an update on the portfolio, and then we'll talk about what we need. Okay, first one. Following rules. 105 a week, building it up slowly. Once we get capital, we can do big moves. 40 to 50% in index funds. Obviously, the America, we still have the stronghold in the position in the world economy, and we will continue to have that for a very long time, right? Even in these hiccups, even in these times of uncertainty, a lot of the world trades in dollars. It's the reserve currency for a reason. Losing that title takes a very long time and a breakdown of many systems that we are not close to yet. Okay, I say that over and over and over and over again. We are fine. Now, are we overvalued? Yes. Okay, but does that mean America is going to not continue to be the best in the world? Not at all. Okay, so we're going to talk about what to expect and how can I protect myself? Because one of two things is going to happen. Number one, we're going to go through a little pain, everything will work itself out, and we'll end up better than normal. Number two is it gets worse, and then we're actually going to physically have to change and shift supply chains, having huge costs and higher inflation and bringing a lot of stuff home. Okay, let's look at the portfolio first. Okay, we're getting up there, right? We're a little bit behind pace for the challenge, which is fine. But this is going to slowly grow along with this backbone, okay? And we're going to protect ourselves. We're able to really get some leverage positions that can boost the number astronomically, okay? Also, we're going to have this as a safety, okay? This is a consistent dividend payer, and studies have shown that if you have a significant like 10% of your money in bonds, then your portfolio swings, even in a downturn, will not be as bad. So you will outperform those that are in high beta stocks. Okay? Moves made. Buy more SPY. Buy. Consistent over time. Sometimes you're going to overpay, sometimes you're going to underpay. Okay? Right now, potentially could be overpaying, right? Or underpaying. It depends on the two outcomes. But over time, prices are going to go up and down, but in the short term. In the long term, it's going to be up. The high highs are going to break and the lows are going to be higher than a couple of years past, and it's going to be like that for the foreseeable future. Like I said, when you buy things in USD. It is the reserve currency. We have the power, we have the most technology, we have the strongest leaders, the biggest companies. It's going to be like that for a while. Okay? China is on their way to overtaking us, but in the end, that's not necessarily a bad thing. Because look at Europe. Europe was the dominant superpower for a very long time, and then we took it from Europe. But has Europe gone down? No. They're still one of the best countries out there. Okay? Also, touched on this a little bit. This is true. If you have a consistent earner that is consistent fixed income, your portfolio will not have these major swings like those that are invested heavily in Nvidia and Tesla, those high beta stocks, right? That have they're at such a high price that their ceilings are actually they're close to their ceilings and there's a lot of room for their floor. So if we have even a small downturn, those will drop significantly. Okay? We're going to go over expectations, which is going to be the meat and the potatoes. Every week I'm going to give you my thoughts, right? This is a small portfolio now, so I'm not going to be able to show you these big moves that I'm doing in my other portfolios, where I'm up thousands of dollars a day, right? But this one is a starter portfolio, so I want you to look at what I'm doing, understanding my thought process, and then build a good base. And then once you get that good base, then you can really expand into these more risky maneuvers, and really try and get those massive swings. Okay. But you cannot do that if you do not have a good base, right? If I'm building a house and if I've got a house over here, I got a portfolio, that's based on risk and Tesla and Nvidia and all these high flying stocks, right? That's built on sand. If those fall, then the whole house falls. If I have a house to my left that's built on the US economy, that includes the high flyers, right? You still get those really quality companies, but it's mixed in with the rest of the US economy and bonds and the government. That is a house of bricks. So even if an earthquake comes, you will not be shaken. Okay, and then you can build on top of that. Okay, so let's go in to the meat and potatoes, what I want to get into, because this rally that we're experiencing, right? I'm listening to a lot of things out there, and the rally that we've seen is kind of scaring me. And there's a reason to that. There's the good and the bad. Okay, in my previous entries, you would see that my price prediction was about 580, maybe 560, especially when we were at 610. Now it went all the way down to 480, right? We're trading at still ridiculous prices because there are two outcomes. We got the good and the bad. The good is we experience short-term pain for long-term pleasure, and we make all these deals, and we reduce the trade deficit, and we start getting back to growth, right? We get AI, we establish world dominance in AI, and we continue to have the world rely on us and pay and essentially pay us, for our rights. And there's no wars, no conflicts. Everyone plays along. The trade is good, right? That's ideal. And with this rally, we're baking that in on almost no news, right? With the only trade agreement has been with India and Europe. There's been no trade agreements between the U.S. and any other country, to my knowledge. Now, I could be wrong, but my news sources say that there hasn't been any agreements, but there has been talks, and that the timeline is actually a lot longer than most people think. So this rally, I think people um, are baking that in, and it might be presumptuous. It might be a little cart before the horse. Okay, the bad, inflation runs rampant and on economy contracts. Okay, and that is a world affecting thing. Now, the good and the bad, right? This is like the best case scenario and the worst case scenario. It's going to fall somewhere in between. Okay. When I was calling for 560, I was thinking that um, Trump wouldn't go as hard as he did, right? Down here, right? If the worst possible thing happens, we're looking at the S&P 500 getting to like 4,500. So that means the SPY, our biggest position right here, is going to be at 450, right? Which is convenient what I put right here. You have to be prepared for both outcomes, right? The market is baking in this, right? This is what the consensus is, which is good, right? But you have to be ready if it goes bad, right? If we see a 40% drop, you lose 40% of your money. And if you're in high beta stocks, then you lose even more, right? We haven't seen, even the pullback in 2022, we haven't seen huge moves downward. Like we haven't really experienced pain that hasn't quickly come back fast, right? If you have a economy that has inflation, higher costs, and the economy contracts, I mean that's very tough to combat. It's very tough. Now, are we saying that this is for sure going to happen? No, of course not. We have people working around the clock. Nobody wants this to happen, okay? But the actions that we're taking could lead to that, and you have to be prepared for both, okay? The way I did it in this portfolio, I look at where most of my money is. It's in this one singular asset. If this goes down 40%, I lose a significant portion of my money. Okay, now maybe this goes up, right? Gold's doing really well and bonds doing really well. Okay, but if this goes down, this will significantly increase and either completely cover my losses or come very close, which then I can take those profits and put it right back in, right? Because sometimes you're going to overpay and then underpay and then overpay and then underpay. But over time, it's going to go up just like this, especially as we continue to dominate, or especially as we hold our dominance in the world. Okay, now we are down $85 in this. Okay, that is a price I am willing to pay for protection. The name of the game is not to be wiped out. If you are wiped out, then you're done. You got to go back to income and back to the drawing board. But if you want to consistently be in this and control your emotions and put yourself in the best, most strongest position, you have to cover your butt. There are people that make a ton of money because they get lucky. They do something and they didn't cover their butt and they got lucky. But every one person that really, really exceeds that way, there are 9 that lost everything. Okay? There are ways to play this game and continue to make consistent money while protecting yourself. You never want to bust. It's like playing poker, okay? You never want to go all in on a hand you're not fully convicted that you're going to win. Because even in that chance, you could still lose, right? Now, I don't think, let's put it this way. I don't think it's going to be completely this good. I don't think it's going to be this bad, but I don't think it's going to be this good. I think where the market is priced right now, we are at 5,600. I think that that is what we're pricing in. I think this is going to be S and, oopsies, S and P. If the best case scenario, I think this is where we're going to be. Maybe 800. We're not going to go back above 6,000 for a while. I'd be very, very shocked. And even if we do, that's great for us, right? But I don't think so. This worst case scenario, I'm going to predict somewhere around 4,500, right? Just because we do have the best companies in the world that are coming in with cash, like Google, Apple, Amazon, they rake in a ton of cash, right? And we're going to be players in AI, so we're not going to go below this. Now, I don't think we're going to hit this one. I don't think we're going to hit this one. I think it's going to be somewhere in between, aka, let's say 40. Nope. Let's just call it 5,000 even. Nope, let's call it 520 even. All right, it's going to be somewhere around here. The likelihood of this happening more than it going to 6,000, I think, is more, just based on down here. Ships are being turned away. Company leaders are saying they will eventually have no choice but to raise prices, right? Also, the American dream is called the American dream for a reason. Everyone in America chases high salaries and success. We have our poorest person here is incredibly wealthy in third world countries. We have the best life. We have the most opportunities, and everybody is chasing the highest, which is why our top 10% is the top 10% in the entire world, right? Because we have the most opportunities, and our capitalistic society allows us to compete, and the best will win, right? If we bring all of that, if everyone is competing like that back to America, then the costs of everything will rise because we will not work unless our salaries are high. You see that all the time. You see about bosses complain about these new kids coming up and demanding so much that they didn't get when they were younger, right? Everyone is chasing those high salaries. There's a lot of work that just won't get done unless you are paid a high salary, which is why companies look to, especially these CEOs, they want to make money too. So they go to other countries that are willing to do our work for a lot less. Why would I pay you, if I'm a company and I need a job done, why would I pay you $60,000 a year for a job that can be done for $10,000 a year if I export it, right? If we bring all that home, yes, it will be um, good for the economy of America, right? But it will come with a ton of work and a ton of sacrifice, right? We need to focus on what we do best, right? If other countries are willing to do our work for us, okay, we should look into that. Now, this trade deficit that we have is an issue, right? It is an issue um, that needs to be solved, right? It's an issue, it's one of those things where you're um, boiling water, right? The temperature is going to slowly rise, right? And you have your hand in there, you put your hand in the water, right? And we got the stone turned on. At first, it's going to be quite room temperature, but it's going to slowly rise in heat to where I can't keep my hand in the air in there, and then it all falls apart. Now, you can say that's in 2 weeks, or you can say that's in 20 years, or 40 years, or 60 years, okay? But if we want to continue as a global economy, then we got to make sure that we are all doing what we do best. If there's a country out there that makes way better products than us, we shouldn't bring that home, and we shouldn't pay high salaries for it. I'm kind of going off on a tangent, but the main point is to protect yourself, okay? My opinions could be completely wrong. However, there are consistent um, mechanics of a market. It's all about what you're willing to do and what you're willing to be paid. It's an agreement, it's a meeting of minds. If I hire someone to do work for me, then it's a meeting of the minds. I say, hey, I'll give you this amount of money for this work, right? And if I have the reserve currency, if I have the power, if I have the money, I have the income, I have the power to say, hey, I need this done. And and you're willing to accept my money for this work, right? America's really good at leveraging and bringing in stuff. We have the most powerful military we have the technology. So nothing bad's going to happen anything soon except this disruption, right? So the basis is you must be prepared for both outcomes. Okay? You got to be prepared for this and you got to be prepared for this, even if it goes to just this. Okay? Um, if you have any questions or if you'd like further information, I know I talked about a lot of topics and I did not go in depth because that was not the focus of this video. The focus of this video is this. Okay, I went off on a little tangent, but this is important. Okay, if you have any questions, leave me a comment. Check out the website for more information. We will see you next.